Good morning, everybody. Welcome to Trade Live with IG. Welcome to my crib. Indeed, yes, coming to you from London, and Piers just getting his phone fixed. There's Piers' thumb. Good morning, sir. How are you?
Yeah, hello. Sorry to everyone this morning. Having some technical difficulties, so I had to do this from the phone. But it's all about the content. I hope everyone can hear me.
It's because you tried to be a wide boy and you only joined at 7:27. That's why, isn't it? Be honest.
That's got a lot to do with it, yeah.
So everybody,
I'm also getting coffee out of my keyboard as well, which is good news. And I absolutely cannot stop doing that, because if I don't do that, I'm not going to be able to do it. Anyway, carry on.
Did you just spill a cup of coffee over your keyboard? Great. Yeah. So everybody, let's see how brave the studio are this morning. We've got Terence and Dom. Who is on the sound effects? We're about to find out. We've got Angeline off for a week.
Oh, are we meant to be cheering about that?
No round of applause. No round of applause from the boys. Let's try that again. We've got Angeline off for a whole week.
Yay!
That's right. When the cat is away, what happens, Piers?
We all know what happens, Richie.
So that's right. Where our first competition of the morning is going to be, where do we think Angeline's gone on holiday? I heard a rumor it's her birthday. Is that right?
Is that true? I don't know.
Yeah, I think it's birthday. So it's not like anything happened on Friday that we've got to talk about. So we've got some review of Jackson Hole coming up. We've got, of course, since our tech expert, we're going to be talking about NVIDIA as well. But what is coming up on today's show? Well, you got me and Piersy through till 8:35, at which point I'm going to be joined by Julian Wheeler in Expert Edge. We're going to have a chat about what is going on in these markets at the moment. And then we're going to open the all sessions for you. How are stocks going to react? Of course, we had yesterday open in the US, so we've got that to go over. A little bit lower volume, of course, because the Brits run everything across there, and we were all on the beach. And then at 9:10, we've got Trade of the Week from Axel. Right, Piers, how's your coffee doing?
Yeah, I think it's okay. It's still working, but I mean, I'm just for the viewers out there, if my Bloomberg keyboard starts not working at home, then I have some problems for the day, to say the least.
Right, let's go into some overnight action. Right, good morning to everybody online then. We've got Friar Tuck, Parky 1977's in there, Jugger's in there. Good morning, Boise. Good morning, Ida Rock, Wing It. Andrew McKelvey, how was everybody's bank holiday? Did anybody try and tune in yesterday expecting me to be working? That'd be very unlikely. I think you know me better than that already, everyone. So, Piersy, how was your bank holiday?
I don't get bank holidays, mate. I do the US market, so a completely normal day for me, albeit just a bit quieter in the communication with clients department. But it was just a normal day in markets yesterday for me.
And now take us around your crib there. That's a beautiful setup you've got. Yeah,
this is just my home rig. Why don't we show everyone at home? This is the engine room.
There.
And I do this. And this morning's been a little bit of a kerfuffle because I was trying to get this live feed on my computer, which didn't happen, and then I spilled coffee on my keyboard. But I'm ready to talk about stocks when as 24/7, as you well know.
I didn't know that posh Australians used the word kerfuffle.
Yeah, I know. I just thought I'd throw that in there. It's absolutely ridiculous.
Right. So, well, let's start with Friday. What was your thoughts on Jerome's speech and the market reaction?
Well, listen. First and foremost, I just want to say that the market, and including me, was gearing up for him to do what I thought that he was going to do. I mean, he always speaks very well and usually massages it quite nicely. But given the fact that what's going on with him, and to be fair to him, he's the polar opposite of Trump. So he's not emotional about it, and there's no tit for tat. And I did think that he was going to use that PPI print and perhaps some other sort of bits of data to try and just throw a very small bit of cold water on this rate cut narrative, which was gathering a lot of steam. And quite frankly, he did not do that at all. In fact, he did the opposite to that, to a degree. I mean, if the scale of hawkish and dovish is here, I thought he was going to be kind of in the middle, and the market was here. If this was on the more dovish side, and he basically just delivered for the market in a big way, and he gave them the dovish narrative. I mean, there are still open questions as to whether he's obviously opened the door. He's done the pivot. He said we're changing our policy stance. We're going to cut rates, and the market loved it. But bearing in mind, you look at the price action. It's all very algos, right? Everyone's just reversing the move that they'd anticipated. So it was just a big algo-driven jump. And then, and let's use Palantir as our example, amongst the other AI trades. So, I mean, what's really interesting here is that the small caps have outperformed the NASDAQ for the last month, right? As has China, as has the emerging markets. And there's been a rotation going on for a little bit now. I mean, look at the Russell index. It's been trending higher, and it's outperformed, as I just mentioned, the NASDAQ over the last month. And then, of course, fuel was put on that fire with the rate cut narrative. So that's now, so the small caps are now very much in focus, and then other parts of the market as well acted quite well. But if you look at the AI trade, it's kind of been faded, right? Nvidia was down 2% before Jackson Hole. It rallied up to 4.5% and closed only up 1.5%. So that
they definitely faded the NASDAQ, didn't they? That was clear from about 3:30 p.m. onwards, 4 p.m. onwards.
Yeah, which is new, right? It's been a while since we've seen the NASDAQ being faded, and the same thing happened yesterday. Nvidia opened the day down Palantir was down 5.9% yesterday on the open, right? And it was aggressive selling, and then of course the usual knee-jerk standard U.S. market day where, whether it be humans or algos, the volatility, the vol subsides, and then it kind of grinds higher and grinds higher. But yesterday, instead of it grinding higher and then going green as it normally does and closing on the highs, it sold off into the close again. So that's new, and I expect it to continue. But then again, we all brace for tomorrow night, right? We've got Nvidia tomorrow night, which is going to be it's going to be really interesting.
Now come on, we've got 30 minutes to fill here, Piers. Don't jump ahead into all the exciting stuff straight away.
Yeah. Okay. Cool. So just to finish off on the Fed, and I think the most important point that anyone can make about markets right now is that there is a rotation going on. It's been going on for a while. I think it's now been validated by the Fed, and I think that it's going to continue. So I'm leaning into, in everything that I'm talking about in my world, leaning into the small caps and the more value and beaten up areas of the market, and fading these exuberant, expensive, crowded tech trades, AI trades to be specific. The reason why I mentioned Nvidia in the same breath is because that could be temporarily derailed tomorrow night, one way or another. We'll see. But the macro and the Fed is a kind of, and we've also got CPI we've also got some core PCE on Friday, right, this week. So that's going to be interesting. Those numbers are very, very unlikely to surprise any. Because then 90% of that 90% of that number is already pretty much known because of the composition of it from CPI and PPI. So we're not going to have a PPI moment where suddenly there's a hot print, or like a super hot print. So I think it's probably more likely that the print's in line or maybe even soft on Friday, given the nature of what it is. So I don't think that's a big risk this week. But so the overall macro rate cut scenario and rotation to me seems to be in motion.
Now, what's the danger of getting caught on the wrong side of that rotation? If you act the same way as you've been acting for the past 3 months, let's say, right, and you're chasing the stocks that have been the winners for that 3 months, there is a chance for disappointment, isn't there?
Yeah, exactly. I mean, and it's happening. It's happening throughout the market, kind of one by one. I mean, if you look at again in Europe this morning, Commerzbank, which has just been crowded into month after month after month, and it looks like a tech stock into 1999. Look at Commerzbank, and Bank of America came out this morning and downgraded it to a sell, which is quite a rare occurrence.
Wow.
And basically just said, enough is enough. This stock's, and quite frankly, I could not agree more. And there's been a lot of that going on in Europe, quite frankly. Commerzbank's probably one of the poster childs. Obviously, Germany with the fiscal package has been the center of this attraction. But going back to your point, there is risk at this juncture. There's so much crowding and so much positivity into these names. And it doesn't matter whether it's Nvidia or Commerzbank, right? It's the same thing. It's the same bit, too much money chasing a few stocks up in a straight line. And you get to a point, it's hard to pick that point, but you do get to a point when it's kind of, enough is enough. And there's time for some pause and some reflection and take a deep breath. I feel like we're at that moment now. We'll see.
It makes some other stocks very interesting, doesn't it? So we see the Commerzbank on screen there. That's exactly what you've been talking about. But I'm quite interested in the S&P equal weight at the moment. Yeah. I'm not sure I can bring myself to buy the Russell. There's a lot of crap in there, isn't there? Yeah,
it is. I agree with that. Although worth noting that and also, do you know the one other thing that bothers me about the Russell is that although I do think it's going to go higher, I think it's going to get the IWM, which is the ETF. I think it will get to 240. But I hate situations, as you well know, when everyone's saying the same thing, and I hate being one of the people doing that. But it's so obvious, this trade, that it's almost too obvious. And like since that, so obviously it's been trading well for a while, but since the we've had 48 hours of trading essentially.
Oh, it's Jay now, is it? Your best buddy,
Jay Powell. Since his speech, I mean, everyone has come out and said that they want to be long small caps, right? Yesterday there was what was it, UBS and Bank of America. Anyway, it's just endless. All I see is just constant, upgrading of small caps. That bothers me a little bit. It doesn't mean it's not going to work, but it does bother me a little bit. And you're right, it is full of a lot of crap. So if you don't want to get involved in that, there's plenty of other things to be involved in. I think you can still be long Hong Kong. You can still be long a lot of these other names in the value space that have been performing for quite some time. The likes of, I mean, even if you look at the likes of Estee Lauder and Nike, right? These names we've been talking about for a long time. These still fit in the basket of unloved sort of stocks, which still continue to sort of just bubble along under the surface. But it's a tricky market right now, right? I mean, and it's always a tricky market, to be honest with you. But just given how far we've moved, I mean, even the unloved stuff, there's a very strong argument for the entire market having a sell-off.
Yeah.
Right? So I think you have to be wary. The book that I'm running, the dummy portfolio for clients, I'm very much max long, but it's very safe stuff. So it's Google, it's ASML, it's IBM, it's Intel. I don't have a single long in a spicy situation at all. In fact, I'm short Palantir. So you got to be, I think, but also there's a hedge there, and I'm ready to get out of this stuff at a moment's notice.
Which I think a lot of people are, aren't they? They know there's risks, and one of the risks is on the front page of the Financial Times this morning. And it's funny, I was just reading it when you sent out your morning email. So let's have a look at the FT here and the worry this morning that Trump has fired the Fed Governor Lisa Cook. The ramifications of this potentially are pretty big on Fed independence, aren't they?
Yeah, I mean, I just think there's so many things almost on a daily basis that people are just scrambling to get their head around in terms of the implications for the independence, not just of the Fed, but of the entire system, right? I mean, we're seeing what's going on with Intel, and Trump yesterday saying, and I quote, "I would like to do as many of these deals as possible." So everyone's kind of scratching their heads, and this Lisa Cook thing is, I mean, technically speaking, he is legally allowed to fire a Fed governor for cause, but then the cause part is, I mean, it's a pretty serious accusation that he's making. So, I mean, we're going to be in a legal fight no matter which way you slice it for quite some time. There won't be any outcomes, and in the meantime, there's just going to be a lot of uncertainty over how this plays out. And again, it's a black and white thing. She either broke the law and therefore what he's doing is legal, or she didn't, and this is absurd.
Personally, I must admit, I don't really care about her situation. What I care about is what it's obvious Trump is trying to do here. So there's a big importance to her seat, and that is that if he can get rid of her and appoint one of his own people, then that gives them a 4-3 balance, i.e. a majority of Fed appointed governors from Trump. And therefore, the theory is that then he has control of the Fed. And he needs control by February, because in February, then the other 12 local district governors are up for reappointment. And therefore, if he has a way to influence their appointment, then by the time Powell's gone, then he controls the Fed, and that's the pseudo end of Fed independence. Will the bond market start to be overly concerned about that this week? Because it's certainly enough of a excuse for those vigilantes to come in. Let's see if we can zoom in there and see where that 30 years trading, because it's back at 493. Forget your rate cuts, forget your dovish. Up to the US, please, producer Phil. So there we go. That 4.925 is where the US 30 year. Watch that long end this week, because it could well gather momentum that Fed independence is really in question. What do you think, Piers?
Yeah, I think that's right. I mean, I'm not quite sure whether the long end is acting like that because of this, but it's hard to tell. But I think that the long end has been it's a very strange battle going on at the long end, quite frankly, because if you talk to people, the smart money of the fixed income world, they all say the same thing, which is from what I can see, which is that they're concerned about inflation, and they think it's going to rear its head again, and that's the argument. That's why we're seeing the price action that we're seeing at the long end. But
I guess the two are tied, aren't they? Because Trump's saying he will take rates down to 2%. Yeah. So that's where the inflation.
Which I suppose, that's absolutely correct. By definition, if you think about it, those two things are completely aligned with each other. So there's some interesting stuff going. But then again, but at every auction though, they turn up and they just lift it. So yeah, it's difficult to tell what's really going on at the long end, as is often the case, because it's a bit of a funny old game. But nonetheless, it's just a bit weird. I mean, again, it's the thing with Trump that's just so extraordinary is that he does these things that everyone goes, hang on, are you even allowed to do that? Is that legal? What's going on here? And then it kind of, because the nature of it, it's so grey that it's kind of just like no one really knows anyway, and then you just sort of gloss over it and we move on. So I don't really know what to say, quite frankly. I mean, all I know is it's just very bizarre, and this is not going to be something that's fixed in the next 24 hours. This is going to take months of legal battles and be very noisy and annoying.
He is the president of unprecedents, because everything he does seems to be unprecedented at the moment. So the other story in the Financial Times this morning is about that Intel stake, right? Yes. And producer Phil is going to get that up shortly. We've got see how quick he is on this Financial Times this morning. Can't find. Well, so if you show the front page of the FT again, Phil, it's that big story right in the middle. And what do we think here? Nope, that's not the one. Go back to the front page of the FT, please, producer Phil. And then right in the let's see. There's a story about what he's doing. The question around capitalism. What is Trump doing with regards to building these stakes in companies, and how concerning is that, Piers, around what we've got going on? Because he's, as you said, he wants to do it with more and more, doesn't he?
Listen, I've got mixed feelings about this. Number one is the Financial Times are an aggressive left-wing media outsource who hate Trump, so I wouldn't necessarily listen to the thing they've got to say. Number two is, and they often regurgitate. Quite frankly, the Financial Times reporting is frustrating at the best of times. But nonetheless, I just think that it's. Listen, you have to be careful coming out and saying immediately that Trump is moving towards being China here, right? Let's just call it what it is, right? This is the concern, right? What the hell is going on? Are we becoming China? Are we becoming, are we becoming France? Are we becoming, is the state control setting a
Well, I
precedent?
don't think you have to label it like that.
Well, that's what's being done on national television by smart people, right?
No, I'm saying you don't have to say it's a China or a France or Cuba, right? What you can say is that he is using state funds to take stakes in US companies, which has never happened before unless the company is in severe distress, right? It happened with the airlines in COVID. It happened obviously with a lot of companies in 2008. Not the home builders, what's AIG?
Oh yeah, okay.
Insurance. But using, I mean, it's just not done. It's meant to be lower government representation in corporate US capitalism, isn't it? It's not meant to be more.
Yeah, I agree. And you know what? Listen, what's fascinating about all this is that Trump is completely and utterly rewriting the rule book for what the conservatives traditionally meant to be doing. And if you think about it, he's actually doing what the Democrats set out to do, but in a completely off-piste fashion. And
Bernie Sanders.
Well, literally, he is everything he's doing is for the American taxpayer and for the working man. I mean, not everything he's doing, so much of it is tailored towards that. And again, there's a touch of genius to everything. Do I like the feel of it? I don't know, not really. Right? But the fact that let's just take Intel, right? Our case study. He is the CHIPS Act money, which was going to go to them anyway, which was just a blank check paid for by the taxpayer down the drain or given to Intel, right? That was what Biden planned on doing. Trump is trying to think like a businessman, as he always does. He said, listen, I don't want to have control of the company. I don't want to have a say in the company. So these are non-voting shares. But what I do want to do is I want to.
And they're not non-voting. He's promised to vote with the board. They're not non-voting. It's ordinary common equity. Not 100%, Piers.
Is it?
It's voting shares, but they've promised to vote with the board.
Okay, well, that's news to me. So I heard that everything I've read is that they're non-voting shares. They have no ability
absolutely
to vote.
Not. They're normal common equity. There's no difference from any other shareholder.
Okay, all right. We'll move on from that.
Go on, you fact check me.
Well, I'm going to because this is like the epicenter of my world, and that's news to me that they have any voting capabilities in Intel whatsoever. Yeah, well, we need to get to the bottom of this, which is a relatively important point. But the statement from the White House is that we have no interest whatsoever in being part of the running of this company, and they made that very, very, very clear. So, if that's the case, if that changes, and they do try and get involved in the running of the company, that's obviously, in my view, a very dangerous line that's been crossed.
But it's not just getting involved in the company. It's our contracts going to go to them and not to others because the government owns a stake. That's not capitalism. That's not free markets.
Absolutely correct. And that's what has to be seen here. Whether this is just a passive thing whereby he's trying to create shareholder wealth for the American taxpayer, or whether he's trying to meddle in the operations of Intel. Now, that's two separate things. Right. One of them is a very passive thing that you can maybe justify, and the other one is a very dangerous line that's being crossed, and the precedent that's being set that none of us, I don't think, will be comfortable with. But
there's an incredible number of lines that are being crossed, though. Right. He's tried to get involved with the media. He's trying to get involved with investment banks, telling Goldman's to sack their economists. Anybody who speaks out against him, the fake news, is either getting sued or he tries to sack them. The Bureau of Labor Statistics give us a bad jobs number, you're sacked. Jay Powell, don't cut interest rates, you're sacked. This is there's no question whether he's meddling and whether he's operating like a mafia man.
Yeah, no, I agree, mate. I agree. I mean, there have lines. I mean, with regard to Jay Powell, I could not possibly agree with your point anymore. I find it deeply concerning, but the biggest thing I hate about that is that he's wrong, right? He was wrong in his first presidency, and he's wrong now. Trying to compare the U.S. economy to the European economy to the rate structure. If you want their rate structure, you take their economy, mate. If you don't want their economy, which you obviously don't, because you're bragging about how good yours is, then shut up about their rate structure, because that's otherwise you don't have a clue about macroeconomics. Which he obviously doesn't. But he's and that if you ask me to boil down what I find most frustrating about Donald Trump, it's this particular subject, because he banged on it. He banged on it about the first time, and quite frankly, because it's the most important subject of all the subjects, right? Interest rates and the Fed and their independence, and his meddling in that pisses me off no end, and that's completely wrong. I couldn't agree more. As for taking a passive stake in Intel, I don't know yet what I think about that, quite frankly. It doesn't make me feel very comfortable, but yeah, we'll see. I mean,
because he's done it with US Steel already, hasn't he?
Yeah, he got with the Japanese deal. Yeah.
Yeah. So it's who's next? Why can't he take a 5% stake in Palantir? Because Palantir comes from government contracts. Therefore, he deserves to own 5% of it, doesn't he?
I agree. It's I think and Palantir actually, out of all the companies that could be on this potential list of his, probably makes the most sense given how much he's in bed with them anyway.
I do wonder if that's one of the reasons that suddenly it started to sell off.
Well, maybe. Who knows why Palantir is doing? Yeah, maybe.
It's certainly not a 0% risk, is it? Anyway, no. Right, that was our quick and nasty on Trump trying to take over the US corporate structure, company by company. But we are going to guess the chart. So what country are we in today, Producer Phil? It's a US stock, Piers. Let's see if you can guess this one before anybody on the chart. Let's go to guess the chart.
Stepped on the floor with the chart in mind. Saw that graph and it looked divine. High with a disco strut, but is it real or just a little bluff? Neon lines and a price so bold, moving like the stories Wall Street told. I've got my mouse and a disco heart, feeling brave enough to guess that chart. Guess the chart under the lights. Is it breaking out or faking heights? Could be silver, could be soy, could be junk bonds dressed like a playboy. Guess the chart, I feel the beat. RSI dancing at my feet. No idea where this will start, but I'm staying alive to guess that chart. Fields in sequence throwing shade. Richest dress in every trade. Angeline's got the disco stare. She gets gold and flipped midair. Everyone's guessing, everyone's wrong, but the party don't stop if the vibe is strong. It's not the profits, it's the art. We're all just here to guess that chart. Guess that chart, spin the wheel.
Welcome back, everybody. So we are just before the London Stock Exchange opening bell. But what was that chart? Did anybody get it? It's Viva. Wow. That is impressive from him. That is very impressive. Viva, do you know them, Piers?
Yeah, I do. They make software as a service for the medical industry. It's a very yeah, I do know them. Yeah. Oh, was that Vive?
Right. We are going into the opening bell. So there it is. Ring a ding ding. Here we go. What is happening on London after the bank holiday. If everybody enjoyed the bank holiday, what are we seeing? Well, it looks like, oh wow, Kingfisher is getting slammed. I'm not sure. I haven't seen anything there this morning. But first of all, Travis Perkins up. Small higher. Then we've got Weatherspoons. That's quite a wide spread there, though. BP up 1%. Rio's up 80 basis points. Imperial Brands up the same. So there's a few people going forward defensives there. BAE Systems winning up 80 bips as well. And then on the losers, yeah, we've got Kingfisher down 4%. Let me just see if there is a news story there. No, I don't see one. Why? Let's see if anybody knows why Kingfisher is down 4%. Right, then we've got ABF, owner of Primark, down 2.8. We got Rank Group down 2.5. There's quite a few losers here, isn't there? What is going on? British American Tobacco now down 2.7%. What is going on?
Mate, the market's opened weak. There's a whole bunch of things going on.
I'm guessing BATS has had a downgrade or something. And IHG, Intercontinental Hotels, down 2. Whitbread down 1.6. The Pru, Diageo down 1. I thought the FTSE was looking unchanged on the open. What is going on here? Let me just check the FTSE futures. Has somebody put a... Yeah, FTSE down 50 basis points. Getting clumped. But there's some very, very strange moves. I do not see why defensive stocks would be getting hit. Kingfisher Cup. There we go. Thank you very much, Supersonic. Good man for that. So that's why Kingfisher down 4.5%. Why are BATS down 2.5%? I mean, they have had a great run. They've rallied from £37 to 42, so that's understandable. But you do have a lot of weakness. Also, Prudential down 1.5%. Marks and Spencer's down 1.5%. Barclays down 1.3%. IHG. I mean, I guess this is what happens when the FTSE has such a big run and is outperforming the S&P 500 for the year. Then we do get a bit more volatility, and you're seeing these stocks come off. So, right, Piers, before we go back to chat in US, let's have a quick look in Europe as well. What are we seeing in Europe? Well, we're seeing BNP Paribas down 4.7%, Air France down 2%, Puma. Piers, did you wear Puma, Adidas, or Nikes?
I'm an Adidas guy.
You're more of a Gucci loafer man.
No, not anymore, mate. That's back when I was a tryhard. I'm talking about. I wear Adidas, mate. I'm an Adidas guy.
Right.
Did you see what happened yesterday with the Pinot family looking to buy a stake in looking to buy Puma?
Oh, go on.
So obviously they own the majority stake in Artemis, and via that investment vehicle, they want to buy Puma, apparently.
Right. I guess that must have had a big day yesterday, then, did it?
Didn't even look at it actually. The Puma. I didn't look at that. Didn't look at the stock.
Yeah. So the stock was up yesterday from 19.30 €19.30 up to over 22 euros. That's an interesting one. I wouldn't have seen that as a bid target, I must admit.
Well, I mean, it's been aggressively sold off. It's one of the world's top brands. So if you're going to buy a distressed asset at a,
I'm sorry. Did you just call Puma one of the world's top brands?
Well, I'm relatively speaking. I mean, it's in the world of Puma's still a big brand in the world, mate. Whether you like it or not, it is.
Is it not dying though?
Yeah, kind of. I suppose so. I don't know. I mean, maybe. Yeah. I mean, it's certainly not.
Unless you're a Man City supporter, like literally, that is the only
Yeah, maybe it's dying, maybe it's dead. Who knows? But it's certainly on its knees. So if you wanted to add something into the art,
That's true.
There's obviously some value being seen there by the Pinot family, anyway.
Yeah. Right. We've got. Let's see the winners in Europe. There's not many. ASML up.
Yeah, well, let's talk about ASML because it's interesting, right? So upgraded today at Bank of America, and the reasons for that being, I couldn't agree more. I mean, I've got this in the book, and it fits the bill across the board, right? But by the way, sorry for those who are live. I can hear producer Phil talking constantly. Is that can the viewers hear that, or is that just
tell
me
them to stop wittering?
So ASML, which has obviously been in the doldrums for quite a long time, is slowly but surely finding its feet. And what I mean by that is that all the bad news is not being sold, and it's kind of just sitting there in a very, very tight range. There was a note out from Bank of America this morning highlighting the fact that after their trip to Asia to the Samsung factories, they see on the ground the orders coming back into ASML because obviously it's lumpy and it's been delayed. So they think the China thing's going to pick up. Obviously, the chips deal with the Americans is a net positive. So net, you're dealing with a very, very de-risked, unloved, large important company in Europe that is kind of on the turn. It also fits into the rotational theme. And if you look at a day like today, right? Look at a day like today, ASML is up 50 basis points, rock solid. No sellers anywhere to be seen when the market is very heavy. And that's the kind of stuff that I want to be long in this market.
Because it's very necessary in that supply chain, isn't it?
Well, I mean, it's critical. I mean, you can't. These next gen chips that are being made, they cannot be made without their machines, full stop. So it's just a matter of the lumpy orders that were made. Now getting that inventory going through and them just coming through with the new orders. Plus, there were some people that waited for their next batch of orders to see what the outcome of the US-China chip regulations and it was going to be. Now we have that clarity, so that does open the sort of doors for those next orders to come in.
It was bizarre seeing it trade under 600 euros, wasn't it? It felt like a real washout.
Yeah, I mean, it did. I mean, they had two, bearing in mind that their CEO, who's Dutch, is very conservative, right? His culture and the way that they do things could not possibly be more different to the Americans. You listen to an American conference call and they talk themselves personally up. They talk their company up. And they're just all they're doing is it's like a sort of cheerleading. It's like an NFL game, right? Everything's so amazing. Where you listen to an ASML conference call and you've got some conservative Dutch guy who's basically just saying, things are not looking good, and I've got no idea when they're going to get better. Which is, by the way, ultra conservative. Like he came out and said, I have no visibility even into 2026. Like things are really dire. Right, so okay, wow, they're not even that bad, by the way, but he made it sound very bad, which is why I like it, because he's thrown the most awful expectations into the market, and the stock still didn't make a new low even after he said that. So I think it's very interesting, and it's definitely in my book on the long side.
It's tricky, and you certainly know all about the Dutch, don't you, Piersey?
I know a little bit about them, given my wife is Dutch, correct?
Exactly. I asked producer Phil this morning. I think we should have a microphone on producer Phil, so we can get his little comments. Like, I can't find what you're talking about in the FT. So I think by Thursday or Friday we should have live comments from the studio. And it's something I'm working very hard to get a camera in that gallery as well. So don't you worry, viewers. Good, right. So ASML, that's one critical part of the supply chain, but another one is Marvell Technologies. Have we got an exciting week ahead of us, Piers Butworth?
We do. So today's Tuesday. Today is the only day of the week when nothing happens. So today there's going to be just a very sort of nothing tape. Tomorrow we obviously have NVIDIA. Thursday night we have Marvell aftermarket. And Big Marvell week. Listen, as mentioned a million times, not many people even know what this company does, right? For particularly people who don't follow US tech. But it's under the radar. There's been a number of stealth upgrades of this company over the last 3 or 4 weeks. I sent a couple of them to you over the last couple of weeks. Bank of America were out yesterday. Listen, it's de-risked, it's under-owned, it's underappreciated. The CEO has made it crystal clear that their high bandwidth custom memory that they're making for the AI space is fundamental in the process, and they're basically the only people that do it, to use his words.
1.9%.
Sorry guys, that's my Bloomberg. So yeah, I mean, listen, I don't often feel comfortable going into an earnings report long, to be honest with you, or have any position, but this one I do.
And it's the kind of numbers we're talking about here. They currently have 6 billion of revenue, roughly. Is that right?
No. For what you mean, their overall revenue,
No,
or their AI?
yeah,
revenue?
sorry, overall revenue, not just in the AI part, but JP Morgan yesterday talking about an increased revenue in AI of 2 billion, so which is significant in their numbers, isn't it?
Yeah. So they so revenue for 2025 is 6.5 billion. And the revenue projections at this point for 2026 are 8.2 billion. By the way, that's a 43% increase in revenue, right? So that means their revenue is growing essentially in line with Palantir.
Yeah.
Right?
And guess what price to sale it's on? Is it on 20, 30, 40?
Well, you want to have a guess? What price to sales do you think Marvell's on?
I'm going to go for 10.4.
9.71. Okay, they're growing the same. They've got wider margins. I mean, I don't even think we should bother even continuing to talk about this. But this is one of the. This is a company that's growing. This is growing. Let's just be clear about this. When it comes to growth companies, you need to price to earnings ratios don't mean that much. They do to a degree, but price to sales ratios for these, if you're above 40% revenue growth, you need to look evaluation wise on the price to sales. 9.7 times sales for 43% revenue growth in this world with AI is cheap as chips. It's so cheap. The only ingredient that's missing from this pie is the fact that the market don't get this, and they haven't quite cottoned onto it yet. But this is not an unknown company, right? People, the tech traders, and everyone, when the market decides to buy Marvell, it just goes up like a spaceship, like a skyrocket, straight up. So it's we'll see. We'll see what the numbers are like. I feel positive.
Yeah, they are. Of course, the numbers are risky.
Numbers are always risky.
Yeah, numbers definitely. So
I hate them. It doesn't matter how much you like the company. They can say something on the call. They could have a quarterly reporting is really annoying, right? You've got 4 quarters in a year, obviously. So they're broken down into little segments, and companies by definition have ebbs and flows. So it's not quarterly reporting is very difficult to trade around. And as I said, I like the setup into this one, but if it comes off a little bit, who cares? Just that's a good opportunity to buy it. I would imagine it would be a huge shock, a massive shock, if they came out and reversed course of everything they've been telling us.
Of course,
right?
Yeah. But as with ASML, we saw that there's always downside as well, isn't there? But I hold them at the moment. I've got them in my portfolio. I've sold my ASML. Just the really nice run up to. I sold some of those at 640. But Piers, everybody, I've started selling Vodafone. That's right. The FTSE has moved so much that at 89 pence, I have started to let some Vodafone go. Still believe in the story, but you become accustomed to stocks having a bit of a pullback when they get to something like 89 pence, and I'd buy them back at 82, 83, something like that. But yeah, going from 72 to 89, with a couple of dividends in there as well. Just trimming a bit of those. Right, Piersey, fancy having a little break? And then I noticed Kukumba talking about some football on the chat there. So it could be time to get up the Fantasy Football League after week 2 when we come back after this break. We're going to Fast Markets after that. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Right, welcome back to Trade Live with IG on this Tuesday. It feels like a Monday, of course, but that bank holiday flashing by. Is that the last bank holiday of the year? I think it is, isn't it? Well, Piers doesn't care. He doesn't take bank holidays.
Don't take bank. Yeah, they're not irrelevant to me.
Right, welcome to Fast Markets. So we're first going to take a look at Fast Fantasy. And let's see how the league table has done this week. Mark Lamb, stand up. What an incredible couple of weeks you've put together. So, Vote for Pedro had got 76 points on the week. That was the best of the week. Then we've got Julian is up there as well. Dom Van Hal on 70 points each. John Finbar Killen had a poor week, but his first week was so good that's kept him in 4th place. Dan Gummer, our video editor, in 5th. Monkey Man in 6th. Monkey Man, 56 points. Not bad. Not bad, Monkey Man. But I did beat you. 60 points from We've Got McGaines down there in 13th place. Ronnie dropping down into 11th. Gavin Ackers dropping down into 10th. We got Luke Moore into the top 10 there. And let's have a look at the nearer the bottom of the table there. Oh dear. What is going on, producer Phil? What's going on, Steve Davies? Gents, if you don't spend your 100 million on good players, you're not allowed to keep the rest. right? So maybe go out there and try and find some good players. IDROC as well, 31 points on the week. Come on, what went wrong? So we've got some poll results to give you. The poll results, the question was, should the US government be able to have voting shares within a company? 73% of you said no, that is not a free market. Only 15% of you saying yes, it all makes a market. The government should absolutely get to vote. So we've got some socialists on the voting there. Right, now we had a question, Piers, from our good friend of the show, Neil, away from the numbers. Any thoughts on GuardForce AI or Snowflake?
GuardForce, no, I don't know that stock well enough. So I'll move on from that one. We'll talk about Snowflake 100%. Again, that's another big earnings report that's coming out. Hang on. It's quite nice being able to do this from home because I've got all of my Bloomberg screens in front of me, which means I've actually got more information than I normally do. This is great. Right. So Snowflake are 27. So what are we today? 26. So tomorrow. So it's there along with NVIDIA tomorrow. So tomorrow night, Snowflake. Now, listen, Snowflake are fascinating because this is right. This is the one of the closest comparisons you can have to Palantir, given in terms of what they actually do. We've talked about it a lot on the show before. The bottom line is, again, they're growing their revenues at. Let me just get the exact number for you. 24%. So 25%. 24.9. And they're trading on a price to sales ratio of Bloomberg 16 times. So again, there's different rules for different players. These guys are an AI software data center play, so they get a higher multiple. It's just the way it is. But they're still very cheap versus Palantir if you consider the like for like situation. Now their last 2 quarters have been very solid. Both of them have been beat and raised. The stock hasn't really reflected that. If you look at the performance of it, I love Snowflake. I think it's a winner. I think it's a one that you've got to have in the book. But going into, I think the earnings probably all the channel checks suggest it's going to be a positive earnings report for them. So we might see a little pop. I'm just wary of the fact that the market is kind of rotating away a little bit from these kind of names, and this is going to have to. My instinct is that they need to increase their growth at 25% isn't quite enough. They need to get that above 30, I think, for the market to start getting interested in them and for the momentum to build again. So I love Snowflake, and I think it's one to own, but I don't think there's any particularly near-term big move coming up in Snowflake. I mean, we might see a jump on the earnings, but I can't. I mean, it's a bit. But I wouldn't. I can't see how we're going to see that's going to kick off a new momentum wave to the upside.
What would you rather own into earnings, Snowflake or NVIDIA?
Do I have to own one of them into earnings?
No, you don't. You don't. You can even be short if you like. Listen,
I think shorting NVIDIA into earnings is never a good idea.
It's tricky, isn't it? 181, is it?
The thing is that, like, we saw 2 upgrades of NVIDIA yesterday, right? So the analysts are very, the analysts are frustrating and chasing themselves around in circles a lot of the time, but they wouldn't be they would not be upgrading this stock a day or 2 before earnings unless they were looking at, because these guys are obviously speaking to the company and looking at the channel checks, and this is what they do for a living. They wouldn't be doing that unless they were very, very, very confident about what they're about to hear. I think the wild card here, and something that the analysts do not know the answer to, is what are they going to say about China? China is 10% of their business. It's about $8 billion in quarterly revenue. Are they going to tell us that China is a 0 or a 50%, or what are they going to say to us about China? Either way, the bar is very high for NVIDIA. So listen, I wouldn't bet against NVIDIA into an earnings report ever, unless I had some sort of very strong feeling it was going to be bad, which I do not. But I am very keen on fading a move to the upside in Nvidia. So if Nvidia beat and they go up 4 or 5%, that'll take them up to all-time highs, and then that will fit perfectly into my rotational theme here. And I think you can probably fade that move. But I just, unless you have to have a position into earnings on Nvidia, I would just avoid it, because quite frankly, anything could happen. They could be up 6 or they could be down 6 if they say something about China. I don't know, and I don't know. I've got low conviction, so it'd be silly of me to suggest that I'm taking a position.
What do you think the maximum they could be up? I asked that, of course, for our friends that are still playing options.
Yeah.
I'm just going to take a quick look what the expected move is now. But yeah, what would surprise you?
And well, listen, in terms of the magnitude of earnings moves for Nvidia, 7-8% at this stage in the game is a big move. You know, the 15 to 18% moves that we saw when ChatGPT burst onto the scene, those are no longer going to happen. So I think it's more likely to be a 3 or 4, but a 6 or 7 would be a surprise in either direction, in my opinion.
Because we're talking about upwards of $300 billion moves at that point, aren't we?
Yeah, we're talking about 2 Intels in a move.
It's just absolutely incredible. And that, to be honest, that's what I see limiting the upside in Nvidia. Because to move from being worth 4.3 trillion to 4.6 trillion, it's just the law of large numbers. I don't think that they can grow earnings by enough or give the market enough confidence to add $200 billion to their already.
Yeah, well, I mean, I think you have to be careful getting too excited about the market cap moves, because the media love to go on about that as well. I think it's because it's just given the nature of this beast. But listen, let's assume the analysts are right. The analysts have got this 40% higher. So, in the most of the top analysts. So
well, it's just to producer Phil was doing some great work there. So he got up the tip ranks for you. It's almost as if he's been watching how I move around the platform. And you saw the average price expectation was $199 there. But Piers, you've seen price targets higher than that.
Yeah, I mean, what have we got here? Well, let's just quickly just bear with me one sec. We'll just get these.
Who do you think the person to listen to? Is it Dan Ives?
What? Oh God! I mean, listen.
I knew that would get you.
Yeah, I mean, okay. So we've got 220 at BNP. But definitely don't listen to them. 225 at Baird. Hang on. Let's just go through the guys that matter. Stifel, you listen to them. 212. Evercore. Listen to them. 214. Wedbush. Dan Ives. 210. Let's just use Dan Ives, right? The most bullish bloke the most bullish guy in history. 210. So we're at 180 now. So that's what I'll use as my marker for the most bullish person, because Dan, regardless of how much he can be frustrating, is the smartest guy in the room with these tech stocks. And he, if there was a reason to be up at 250, he'd be at 250. So. But then again, it doesn't mean much. Like, if they smash numbers, he'll just raise his target again, and it will be at 250. So I just think that it's a fool's game playing around earnings reports. It really is. I mean, listen, it's the only confidence that I have in fading the move is a big picture thing. It's not necessarily what's going on at Nvidia. It's about the market having made a decision that now's the time to start fading these exuberant moves. But the problem with Nvidia that makes them so different to Palantir is that they're actually not that expensive. I mean, they are expensive, of course they are, on a historical basis, but in terms of a real, like, what's actually happening right now in terms of their forward earnings growth and their forward revenue growth, they're not actually that expensive.
Do you know the thing that worries me here, and it's a very different industry? Having traded through the 06-07 super cycle in the mining stocks, right? That's when China was in its commodities super cycle. This is what NVIDIA feels like to me. They've gone through and are going through and are probably right at the peak of a CapEx super cycle. Does that continue, or do you actually see CapEx spend drop at some point? You know, is a 27 number? And the reason I ask that is because you shouldn't be valuing earnings growth on a 35 times multiple if you're actually at the peak.
Agreed. And I mean, and let's break this down. So Nvidia for this year, the expectations is for 55% revenue growth, right? Which by the way makes them grow. They're growing at 7% faster than Palantir, and you're paying 30 times sales for that. Okay, so which is 1/5 the price of Palantir. So but the question is we fall off to 33% next year. And as you just pointed out, this CapEx cycle, which has been very aggressive and very front loaded, is it's not a question of if, it's a question of when is this CapEx going to slow down. And this is one of the top stories and narratives in the market. And you've got the likes of the FT, again, who are, as I said, always a relatively bearish media outsource, talking about this almost on a daily basis, right? I've seen 3 articles from the FT, one of which was just regurgitated from Bloomberg, but nonetheless, they're banging the table on this theme, on this message that the CapEx cycle is ending and it's going to slow down dramatically. Now, if that's accurate, these guys are the ultimate picks and shovels, so of course that's going to slow them down, and I agree with that, and I find that, and I that's why I'm very hesitant to be chasing Nvidia up here. But it will have another moment at some point in the very not too distant future. It may well be after this earnings report, where it has a big drawdown, because that's what Nvidia does. It becomes really sexy and very fashionable, and everyone piles into it, and it's all backed up by numbers, and then it goes off the boil and has a big drawdown. And that's, I feel we're close to that moment now.
And that, yeah, I completely agree. And even longer term, I think you should have 2028 earnings. I think you should have them on like a 22 times multiple.
Yeah, I mean, and that's reasonable, but I mean, what's reasonable and what happens are two very, very separate things. It's kind of a question of when is the market going to have its moment of reflection and take a deep breath. I've put my neck out with all the people I speak to about markets and said that moment is upon us now. We just have to navigate this earnings report from Nvidia. Now, it may well be the catalyst for all this, right? Nvidia may well have an inline quarter and tell us that China's not so good, and the stock might sell off. And then, the analysts are irrelevant at that point, because the analysts are always after the fact. So, so we'll see. But I mean, I just don't think, making decisions before a Nvidia earnings report with no real signals that the CapEx has changed much is a pretty silly thing to be doing. I think you wait until afterwards and hear what they've got to say. And let's not forget how important they are, right? You've got the macro, you've got growth versus inflation, and you've got interest rates, and you've got earnings, which are the traditional pillars of a market. But now you've also got AI capex, which is another pillar of the market, and these guys are the poster child for that. So it's critical what they say, and it will change the narrative. And I mean, the algos and everyone will. If it's an amazing report, we will end up higher, right, in everything, them and the Nasdaq. But what then is my question. And and unlike previous quarters where that just kicks on, and look at Microsoft where they upgraded their guidance, and then they've just literally gone up in a straight line for 3 months straight. That's not going to happen with Nvidia.
And have come back now, though. That's quite interesting, the way that Microsoft's come back to earth.
Well, I'm not sure if it's come back to earth. Yeah.
Oh, it's significantly lower than where it was after those earnings.
Yeah, no. Oh, sorry, I was talking about the earnings back in April, mate.
No, but that was people expected it to go again, and that was the
exactly right. And you and I spoke about it on the show, and I think that's exactly what will happen with Nvidia. Exactly.
Well, that's a great, yes, I like that a lot. So what you're saying, the expected move on Nvidia on numbers is $11. So we're talking about 5.5% there, or just over 5.5%, 6%.
That makes
And
sense.
yeah, that takes it up to 192, 193.
Yeah, and to me, that's cooked. That's done. Now you can sell it at that point.
Yeah, and this is what we saw happen to Microsoft. Microsoft traded up to 530. In fact, it went higher than that, didn't it? Yeah, there we go. Microsoft traded up to 560 on the day of its numbers and has sold off 10% since. And that's, I think that could be a very good shout. We see Nvidia trade 195, and then it's back down at 180, where we are at the moment within a month to 6 weeks after. Piers, it's been wonderful as always. Sorry, thank you for joining us on this this beautiful morning and letting us into your home there.
It's been a pleasure, guys. Happy trading.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome everybody. So we go from one expert to another this morning. We have a treat for you. Julian Wheeler joins us again. Good morning, Julian.
Good morning, Philip. Good morning. Nice to be with you again. Although not with you this time.
Yeah, exactly. Yeah, we're waiting for this studio. We haven't had the update on how it's looking yet. I was expecting a photograph this morning of a nearly finished studio, but I'm worried I haven't seen anything.
Right. Okay, well, luckily we can all do it this way now. So,
now, you must be somewhere as beautiful as Angelina's on holiday with that background.
I'd like to say I was, but I could just show you my rather dull West London flat otherwise. So I thought this was better for a nice sunny morning, new week, just had a bank holiday. So, I thought this was the most appropriate one I could do.
And it's going to be an exciting week, isn't it? Because by the end of this week, we're going to know the market's reaction to this move from capitalism to corporatism. And you've got a few thoughts on this Intel stake build, or is it a stake steal from the administration?
No, I think the full details are still sort of coming to be ironed out, if you like. But as I understand it, so this is the government wanting to take 10% ownership. Trump flagged this a while ago. The market raced the stock up, and I sort of said, well, maybe not too fast, because let's see what they want. But they're actually putting in 8.9 billion, and then and allowing Intel to keep the 2.2 they've already paid them. So they're roughly coming in at 10% at just around the current price. They take no special golden share, they take no governance, no board seat. So in that sense, they're just like any other investor. And talking of any other investors, SoftBank bought 2% at the same price. So this $23 a share price seems to be. So I reckon that's the floor. The difference is this is not a bailout. Right? They're not bust. Intel aren't bust like the banks were bust in 2008 and needing to go to the government to stay alive. It's just the CapEx cycle is so expensive, and NVIDIA missed a couple of steps. I mean, you go back to the history of Intel missed a couple of steps. One was that they missed the offer from Apple to make the iPhone chips. That was a pretty bad call. In 2005, they should have made all the chips in every iPhone. But the then CEO said, no, you're not going to pay us enough. It's going to be a bit of a niche product. Now, of course, that sounds really stupid now, but you've got to remember back then, Nokia was the market. And, let's never forget, if you're an Apple shareholder, never forget, there is no divine right that we all have to have iPhones. Who knows? Anyway, so back to Intel. So the government's putting money in. And the question simply is this old Intel or is this new Intel?
Yeah, definitely.
And new Intel, I would mean it becomes just a foundry operator. So it just becomes the manufacturer. Trump has said, I mean, it's, you see it every day, actually, we want more manufacturing in the States, and we want good, what should we say, good manufacturing. He's worked out he's not going to make Nike trainers in the States. He hasn't got the labor force for that, let alone the cost base. Those aren't the jobs they want. They want drugs made in the States, not made in places like Ireland or something. They want semiconductors made in the States, which means not made in Taiwan. And this is key because we all know where Taiwan sits. It's 100 miles, it's a 100-mile island about 30 miles off the coast of China. And the world has a really, really stupid position right now, which is that 70% of all the world's semiconductors are made on that island. That's not clever.
So dangerous.
Well, it's not clever whether China does something. It's also all part of what you call the Pacific Rim of Fire. I mean, there could always be an earthquake like Fukushima, and then you would lose the world's semiconductors. It'd be more, it'd be more serious. That's more serious than if Saudi Arabia stopped pumping oil. Saudi Arabia is about a third of the world's oil. Taiwan is over 2/3 of the world's semiconductors.
Wow.
So that's why the government's actions, I think, are pretty sensible, because you've got to get Intel back in the game. They don't have the money. I mean, that's the reality. They've missed out, and customers, it's very chicken and egg. Customers don't want to go to them because they say, well, we know TSMC makes these very, very well. TSMC is a great company. Let's not beat about the bush. Great company. However, it's just rather badly situated. And so now you have the problem. America wants to bring them here for national security, for jobs, etc. And by buying into Intel, they can do that. You've seen recent announcements the last couple of months that both Apple and NVIDIA are going to invest hundreds of billions in the US. Well, where are they going to do that? What are they going to do? They're going to give it to Intel. That's what I say. That money's going to Intel, and they will be strong-armed. And Trump is the man for this.
Absolutely.
We've
never seen the likes of it before, have we? That there's he'll stop at nothing to get his way, because he's very confident his way is the best way.
Yeah, and he's got a political backing and mandate. It's become, you know, quasi dictatorship over there. I mean, he's just fired one of the Fed governors last night. Lisa Cook refused to resign, so he's fired her. Yeah. This is what I'm worried about. I'm much more worried about stuff like that rather than the individual companies. Who's to say the tariff policy, if applied, you know, sensibly, not the crash bang, you know, wallop he started with, but, you know, who got the better deal on the EU tariff? I'd say America.
There's no question about that.
Yeah. So with Intel, what he's doing is, so he's putting the money in and he's saying, right, we're going to be the manufacturer. So therefore, Apple, your money's going to Intel. NVIDIA, your money's going to Intel. And so it will go on. If Intel then becomes just a manufacturer and more or less gives up chip design because they are so far behind, that then would be good for all the other fabless five, as they're known. That would be good for Qualcomm, it'd be good for ARM, good for AMD, etc. And probably net positive for NVIDIA too, because they'd have a second source. People it's bad for is TSMC.
Yeah, I was going to say, this sounds potentially, how much of their market share could be taken away?
Well, that's a good question. Intel is still behind TSMC. But the reality is they're behind in terms of cost, as in they're trying to move to a new technology. If the technology works, which we think it does, it's a matter of cost and it's a matter of scale. Like any manufacturing process, if you make, you know, one widget, it costs £1,000. If you make 100 widgets, it costs 10. If you make 1 million, they cost 1. So yeah. The more customers that Intel can have, the more effective it can become. You say, well, it'll take a long time for Intel to become as efficient as TSMC. But Trump can change the game. Trump will just say, fine, the yield, which is what we're talking about, the yield efficiency of Intel will be offset by just tariffing Taiwan. You'll notice there's no trade deal with Taiwan yet. How about everything coming in from Taiwan gets a 50% tariff, 100% tariff?
Wow.
Right? So go ahead, make your chips in Taiwan, and we will tariff them so that they are cost competitive with what Intel is making in the States. Why not?
Has there already been a deal with TSMC for them to bring production onshore into the US, though?
Yeah, yes, there has. And I'm not saying that Trump won't allow that as well. He doesn't want to give Intel a monopoly. Although if he owns 10%, he's...
Well, I was going to say that changes, yeah.
It's more incentivized. But no, TSMC are talking about and have talked about and was very publicly, they are building a plant in Arizona that's going to be very big indeed. But they've slow rolled it. And the reason they've slow rolled it is they've got a problem. Because if they move their manufacturing to America, why does anybody need to come to Taiwan's rescue?
Wow.
So there's going to be massive geopolitical issues here. And so why I say TSMC is a loser is it's simply this. They're now worth $1 trillion. Right? They've had masses of revenue. Mm-hmm. They are a virtual monopoly in the good sense. They are just the only people who can do what they do. Samsung does it as well. And to keep Samsung in the game, you'll notice, or you may not, Musk, his XAI, they gave a decent sized contract to Samsung the other day. Not because TSMC wouldn't do it better, I'm sure they would, but they've got to keep Samsung in the game. We've reached the point where TSMC is so dominant that it's bad for everybody else, and it's bad for their customers effectively. I mean, you do not want one supplier, and the world doesn't want one supplier. So all I'm really saying with TSMC is it doesn't get any better than this.
Exactly, it doesn't get worse quickly, but it doesn't get any better, and slowly over time, which is great because when we're looking at the options market, then time becomes very relevant and we can structure the trades in that way.
Yeah, I reckon you can be a call seller of TSMC all day now because, you know, the upside, they're not trading on nosebleed multiples like some of these high flyers, but TSMC is still cyclical. I mean, you only have to go back, if you've got the chart for this year, it started the year around about 200 and something, and quietly, or rather quickly, dropped to 140 by April. It's gone from 140 to 240.
Wow.
So, I mean, April to August is $100. There's plenty of room. I mean, as a hedge to your portfolio, putting a short on that versus being long some of the other ones, I'd be quite happy with that. There you go. That's it. Good. That stock, for something that is allegedly a stable monopoly, that's a very, very volatile chart.
ASML, we've been talking about this morning. We covered up to 650. Oh, yeah. How does this affect ASML?
I think it's good news for ASML because ASML effectively only has two customers, TSMC and Intel. And the worry was that Intel, they said, we're going to shut down. I mean, basically, the new Intel CEO, Lip-Bu Tan, I mean, it's not quite blackmail, but Trump probably appreciated it. He went around and said, look, Trump, I'm not doing this, okay? I don't have the money to do what you want, which is put it all into CapEx, spend a whole load of money with ASML. You know how much these ASML EUV machines cost, do you, Philip? About 300 million each.
Right. Oof.
Okay? It's really not small potatoes. So there are only a handful of people who can actually afford it.
Yeah.
They are TSMC, Samsung, Intel. And you'll notice the difference. Samsung is government-backed. TSMC is, in fact, government-backed. And now Intel is too. So it's great news for ASML because it means their other customer is back in the game.
Good. Right. So if anybody wants to read more about this, then Julian has written a wonderful piece, Over the Pond, Trump all in on chips. So our producer is going to pop that link into the chat, if you don't mind there, Julian.
No, that's fine. Thank you. Yes, I published that. I published it last week. I actually wrote it before this all happened. It's really rather annoying that they move so fast.
They did move fast as well, didn't they? You've got a stock you're interested in that is reporting this evening.
Oh, yes. I told Angeline about this, so I'm being consistent. I told her a couple of weeks ago.
She'll be happy.
It's called MongoDB. DB stands for database, and there's the clue for you. MongoDB had its run in the sun a few years ago. It was a classic COVID winner because basically any operation, there you go, there's its run. It had a huge move based on providing database for transactional databases for online e-commerce. Think of it like that. So, if you were a small business, this was the type of product you used. Now, the reason the market's come down on it since, they said, yes, well, now that's as good as it gets for you and you're running out of road. And sure enough, they are, they have lumpy quarters. It's not easy business. But what they've created is called a vector database. And just to keep it all simple, basically their database allows you to put anything in it, not just binary, it takes any data. So whether it be that image, that chart you've got, a little, your little YouTube clip with Trade IG, you can put it all into a database and have it all turned into zeros and ones, which is what a classic database does. And it just so happens, we think, that this database works perfectly for all the use cases you're going to do for AI. So the call is, this could be a moonshot if the market finally decides this is the database that is most efficient, fastest and cheapest for handling all your AI cases.
Wow.
And they had misstepped for a while. And you see that gap up in the last quarter, a little gap there in April. It went from like 200 to 230 there.
I see it.
Yeah, that one. Right. Well, funnily enough, it did, when you were talking earlier about what happened to Microsoft, it did a classic massive move on the earnings, but don't be fooled by that, as in that's good news, but be patient. And then as you can see, it back and filled the gap.
Yeah. And
there at 200, it's buy. And then the market took off and we had the last hurrah run into the beginning of August. And it's come back along with Microsoft and Palantir and everybody else just now. But the key point on that last quarter was they said they had the biggest sign up of new customers in 6 years.
Ooh.
Now that tells me they're doing something right.
Yeah.
So it'll take a while for those new customers to turn into revenue.
Okay.
The other good thing is they do 2 billion in revenue, and the market's it's a valuation of about 16. So it's on about 8 times sales.
Right.
Now, you know, in old money, we'd say 8 times sales is rather expensive. But in this AI world, let me give you a comparison. There's a thing called character AI. I don't know much about what character AI does, but it better be good, because they're just doing a private round I'm reading this morning that they're going to be valued, they do 50 million in revenue, right? 50 million, and they want to be valued at $1 billion.
Wow.
So if they're worth $1 billion, then this thing's worth a hell of a lot more than 16 billion. That's my point. It's, you know, 8 times for one of these companies. So if they report a good quarter today and then talk about it, you should think of them in the same bracket as things like Snowflake, which is public, and Databricks, which is private.
Okay.
And both of them are worth probably twice what Mongo are on a price to sales. Yeah, on valuation to sales, they're about double what MDB is.
Excellent. Wonderful. We'll keep a watch on that one tonight. That makes it a full house, because that means we've got MongoDB tonight, we've got NVIDIA and Snowflake tomorrow, and then Marvell Technologies to watch on Thursday. Now, we cannot let you go without having your thoughts on this Fed independence question, that the whole Lisa Cook dismissal has conjured up. Do you think the bond vigilantes come in now they realize that Powell hasn't been sacked, but Trump is going to be running the Fed through his appointees from, you know, February onwards?
Well, it's a difficult one. That, I think, first of all, the market, well, okay, so the bond vigilant, you're really talking about the bonds. I mean, the bond market will decide as and when. So we're now pretty certain we're going to get a September rate cut.
Yeah.
If that rate cut looks, shall we say, justified. So if between now and then we have economic figures related to costs, labor, inflation, particularly labor, I think, that do suggest there is a slowing, and a lot of people start to think that's true, then they're going to say, all right, the way Trump's going about it, we don't like it that much, but, you know, we've got rates at 4 3/4. Inflation is sort of under control, so we do have, you know, positive real rates, and we have got room for 25 bips. I think if he did something like 50, the market would panic.
Yeah.
I think if he does 25 and he goes, you know, there you go, it's your 25, and we can justify that based on what we see, and we're now going to continue to watch, so that it's all pretty consistent with what he's previously said. So if that's all the same, I think the bond market will say, all right, we don't have to panic yet.
Now,
even if Trump doesn't like Lisa Cook and he gets rid of her, it's not good. Yeah. It's not good, no question.
What happens if the job number comes in at 125,000 on the 5th?
125. I don't think 125 is why, is that what you've heard as the outlier number?
Oh no, sorry, no, I'm just, you know, if it comes in strong. So suddenly you don't, because at the moment Powell was very clear, it's balanced between inflation and unemployment. If inflation is coming in hot, as that PPI suggested, and suddenly there isn't a balance of concerns, what happens then?
I think you'd need, for Powell to look like he had to slow down, I think you need a number, say 200.
Okay.
Something like 200,000, a really big number. And that's what I call big, because, you know, the market, you have to create, to keep the economy going in the States, you need to be creating roughly 100,000 anyway. You know, if you create less than that, unemployment will start creeping up. So so, you know, I know we're talking, I think a really massive number of 200, then the bond market might say, right, you don't need a rate cut now. The economy is still strong. So if you've got a combination of a massive job number and another bad CPI that followed on from that PPI, then the market would start saying, well, wait a second, you shouldn't really be cutting rates, should you? And then if he did, they might take fright then.
Yeah.
But I
Excellent.
think, yeah.
Sorry, Julian.
No, I was going to say, but I don't think that's going to happen. I think there is some weakness from what I'm seeing out there. In amongst what the companies are saying, the strength in the housing market, what we've seen from Home Depot, what we saw from Walmart, the sort of retail consumer sector. And the other thing is that this economy is being so heavily driven by this AI capex right now, which is going to end. I mean, it is going to end, as in it's not going to keep going. It's just not possible. No. There's no payback. That would be the worry. I just can't see it yet. And like all these things, it won't happen when we're looking for it.
Julian, thank you very much. That's excellent. I almost started another conversation about, I was having a coffee in High Street, Kensington on Friday, and two gents beside me started talking about something called symbolic AI. And they said that AI as we know it is completely unsustainable. And in 2 to 3 years' time, we will not be doing AI the way that OpenAI currently is. But we can't go there because the old session's already open. But it's an interesting one. We can touch on it next time if possible.
I will try and look that one up for you.
Good stuff, Julian. Thank you very much. We're going to go for a very quick 30-second break and then into all sessions. Julian, have a wonderful day.
Thanks very much, Philip. It's been my pleasure.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome back, everybody. So straight into all sessions. There it is. We missed the bell because the conversation was just too great with Julian there. So we're going to be looking at the movers. It is Moderna at the top of the leaderboard there, up 50 basis points. Boeing also up small, $227, and Coca-Cola. But that's not the exciting stuff, is it? We see Nvidia holding the 180 level, but let's look at the down moves this morning. Well, there they are. It's Palantir. Palantir down 90 basis points this morning. 155. It seems to be kind of stuck on that 155 level. Oh, did I have a wonderful week last week at the Edinburgh Fringe because of that little beauty. Boise was messaging as I was sitting in Edinburgh Princess Street Gardens, and the stock was 144, and we kind of decided that's enough. It's gone far enough. It looked very oversold on that on the Wednesday, I think it was. So I covered my short there at 145 and actually sold some puts because I think the stock just trades between us kind of 145 and 175. So 145 to 175. I have a short strangle on. So the old I think 150 puts and 175 calls is what I'm short now. So Palantir trading 155 just feels roughly the right price, doesn't it? Tesla 344, that one continues to just defy gravity. So Tesla down 72 basis points at $344. Then we've got Intel giving up some of those gains. As we said, is it a concern or is it a great thing? Julian certainly believes it is a great thing. Intel, that 10% stake in the government will help them to grab that market share away from TSMC and to bring more jobs and more foundry into the US. So going on what Julian said, Intel now is one for the long term by the sounds of it. And you know, you wouldn't be completely surprised to see them up at $30 bucks. So, you know, is $23 the low? So $23 was where SoftBank paid for their stake. Is that the new low? Will there be long funds getting involved? Will Buffett get involved? As we know, he's got a big cash pile there. What else are we seeing this morning? AMD down 50 basis points, and Salesforce has been a weak one. Salesforce down 246 bucks. But it is, yes, certainly a slight tilt to the red this morning. MicroStrategy, do you know what? I haven't seen that one for a while. 342. And my goodness, what is going on in SWC? So let's cross over to the Smarter Web Company, because this imploded last week. I did actually buy some on Friday at so £1.40. I bought them at on Friday, just before Jackson Hole. So they had a decent day, decent move. In the end, they were down 11% at that point. But it's tricky, isn't it? Because they're back now. I think it's 1.9 times MNAV. There's an article in the Financial Times this morning from one of the columnists, Dominic O'Connell, talking about Bitcoin treasury companies, saying that it's worthwhile getting your head around them. I think we've got our head around them here. But yeah, I did not expect them to see, I did not expect to see them down at £1.50. Now, I did see one of you on chat this morning saying that they had an update. So they've taken in 3.7 million. That's from the ATM. But I think the stock really needs to see Andrew do equity raise or a convert. If we saw another 20 million convert, that might put a little bit of belief back into this price action. Now, just to give a little bit of context, though, it is not just SWC that this is happening to. Metaplanet, if you look at Metaplanet, exactly the same. They've come down from 1,900 down to currently 837. So very much a similar pattern. These Bitcoin treasury companies, the multiple has come down from, well, Strategy has been as high as 4 times MNAV, and Strategy is now only 1.55. So it's interesting to see the way that things have come off. Right, it is 9:09 a.m. Just a final look at the futures. We're seeing the S&P 500 6,430. We're seeing the NASDAQ 100 just under the 23,400 level. FTSE 9260 down 66 basis points on the day. FTSE giving up some of its move. Are you worried about inflation in the UK? Are you worried about potential tax increases coming from Rachel Reeves in the budget? Bit of weekend press there which was negative. We will go into the UK more in depth tomorrow. I wasn't going to even try and talk to Piers about UK inflation this morning, as I know I would get his the eyes rolling into the back of his head. But that's nearly us for the morning. Thank you very much to you all joining us this morning. I think that's been a great discussion, both with Piers and with Julian. Especially funny that Julian thinks that my name is Philip. Of course, producer Phil is who he was referring to there. I don't know if some of you picked that up, but I think Angeline set him up on purpose to get me back for saying a whole week without Angeline. Still not a round of applause from the team. I don't know. How many times do we have to try it? Right, everybody, enjoy your day. We've got Axel coming up for Trade of the Week. I wonder what it's going to be. Just looking down my screen. Is he going to be delving into the US indices? I don't think he'll do gold, because gold is kind of a bit of nothingness at the moment. Bitcoin he covers more in charting crypto. Is it oil? Oil has found a little bit of a support at the $62 mark. Could be the Russell 2000. Ooh, yes. My guess, and it is a complete guess, I haven't spoken to Axel this morning. My guess is that it will be either the Russell 2000 or even the S&P equal weight would be an interesting one. But I don't think he would go that off-piste. Good stuff. Jugger saying, Rich, we love Ange. Of course, we all love Ange. But a whole week without Ange. No. No.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to Trade of the Week on Tuesday, the 26th of August 2025. What I would like to do today is to look at palladium, which we don't often look at. But if you look at the daily chart, what we can see here is that we tested earlier this morning the uptrend line going back to April of this year. And what is interesting is that this uptrend line more or less coincides with the low seen in the middle of August. And also, if you look at these lows here going back to June of this year, and then the high going back to early June of this year, and we've also got basically support here going back to October of 2024. So you can see a confluence of previous highs, previous lows, an uptrend line, all of which may mean that we could bounce off this support area. And if we were to do so, how far could we go? Well, it really depends. But if we take out the highs seen last week, we could probably pretty easily retest the late June high. So this sort of area here. And our stop loss would have to be placed below the last big reaction low. And where's that? Well, that's this low here. Can you see here? From there, we rallied all the way up to the highs seen back in July. And basically, that's our stop loss just down there, because that is also below these highs here going back to May. As I mentioned before, the highs going back to January of this year, and also the highs going back to November of last year, all of which could act as support if we were to slide further still and dip below this uptrend line. So today's trade of the week is to go long palladium at current levels around 1096 and do that with a stop loss below the lows seen in the middle of June of this year, around 1029, and with an upside target around 1190. That gives us a reward to risk setup of around 1.5. What we also could look at is last week's trade of the week very quickly, and you can see that we went short Euro Swiss franc, and we did so here on sorry, I got the wrong chart. That's why I couldn't. That's the one here I was looking at. So Euro Swiss, we basically went short here on the 18th of August, last Monday, and had a very tight stop on there. And now we've gone very close to our downside target at 93.40. We went down to 93.57. So what I would suggest is we just get out of this trade, because it was a very profitable one with a risk reward set up around 5-1. So I'd like to cash that one in from last week. So another profit in our portfolio, which brings us, I think, to returns this year to around 27%. And that's interesting, because a lot of people stopped following me at the beginning of the year when I got 4 trades wrong in a row and we were down around 6.6%. On that note, hopefully see you next week again. Right, let's go into technically speaking. Let's look at questions I've got from you. Keep them coming. And the first one is Palantir. Let's look at the Palantir share price. And we can see we've had a very nice uptrend here on the daily chart from the April lows, a very strong uptrend. And what we then saw, though, is a fall through this uptrend line. You can see here, we fell through here just last week, and that was a long bearish Marabuzo candle, telling us that this trend line break was very likely valid. But what then also happened is we actually fell through the last reaction low. What I like to see is always a trend line break, and then I go to the left of my chart and I look, where was the last reaction low? A low before, from which one we then sort of went to the new highs. And that was down here, the early August low, and we fell below it. But we only did so on an intraday basis twice last week, or actually once last week and once yesterday, but we didn't close below that. So for me, technically speaking, if we were to fall through here on a daily chart closing basis, that would confirm that a major top is being formed. Unless that happens, and also because we've had this spike low down here on Wednesday of last week, that you can take as a reference point. Unless we stay above here, we may form a top. But until we fall below that low going back to Wednesday of last week, which may not happen, by the way, and that low on the daily financial bed comes in around 14,237, as long as we stay above there, we are still in uptrend, even though we've had this sharp descent, because these sort of moves happen quite frequently in markets. It's normal. I mean, this one is a bigger one that we saw, for example, at the end of June. and also at the beginning of May, but it doesn't necessarily mean that a top is in place. So basically, I would technically remain bullish as long as we stay above last Wednesday's low. A fall through there would indicate that we fell through the last reaction low, also the previous reaction low, which was below the uptrend line, and through the uptrend line, all of which would be negative. If that scenario were to play out, how far could we fall? Well, we've got all this support area here between the highs seen since May and June and these lows here going back to the beginning of June. So that would be my first target zone. So around 12,200 and 300. And you can also see the highs seen back in February coming in that area. So that would be a short-term downside target. And then the question is whether we could hold there in this sort of scenario or not, because if that is not the case, we may actually slide all the way back down again towards the April low and the January low of this year. That would be a major reversal. But it doesn't mean these things happen. What we're preparing for is what happens if we were to fall through last Wednesday's low. As long as we don't, as I say, the trend is your friend. And yes, we've broken through an uptrend line, but that could just be flattening. It doesn't mean much in itself. So basically, we could still go higher. In this case, what scenario do we want to see? We want to go above Friday's high, which on the daily financial bed was made around 16,320 or so. If we were to rise above there, where's your stop loss? If you're long, probably just below the low seen on Wednesday of last week. And in that case, we could just grind higher again and perhaps even overcome our high that we made in August of this year. So short-term, sideways trading between that high from Friday and the low from Wednesday of last week. If we break out of that range, that might give us more information of what the chart might do in the future. But it is not looking as bullish as it did a few weeks ago, because we've had this trend line break and we fell even intraday and not on daily chart closing basis, but we did fall below the last reaction low. So that would perhaps lead me to, if I were a longer term investor, perhaps move my take profit levels up to below that Wednesday low from last week. So look at JD Sports. Now, this is one that one of you is holding, because I keep getting asked about JD Sports. And yes, we did break through this downtrend line going back to, I believe it was September of last year, and did so in April of this year. Then we had retracement down, then a very nice up move here, but we fell short of that high in May. And since then, as you can see, we are trying to break above that May high. We did so back in July, early July, failed. We did so again at the end of July, failed. And we did so again last week. Question is, are we failing now, or are we just consolidating, and are we trying to break above that high going forward? And if you look at the chart, I mean, just look at the chart. Don't try to anticipate what's going to happen next, but see what the chart is telling you. What can you see? Well, even though these are marginally higher highs on the daily chart, you can see a series of higher highs over the last, I don't know, 6-7 weeks or so, and you can see a series of higher lows. That is the definition of an uptrend, even if it's a slight series of higher highs and higher lows. So perhaps we will break through this high this time round, and in that case, we could extend to the next higher resistance area, taking us back towards the December 2024 high and the January high, and that would be around 103, 105 or so. And you can see at the moment, we're struggling with the low here seen in November of 2024 and the high seen in May of this year, because that is acting as resistance. So JD Sports may head higher again. Short term, I'm pretty encouraged because we're just holding, but we may see one of those days where it suddenly comes off again, as we did back in July. We may not. Short term, I would probably look at the low seen on Thursday of last week as the last reaction low. As long as we hold above there, we may retest that resistance area here, and we may break through it in that case and head higher. That view from a medium-term perspective is probably valid as long as we stay above the last big reaction low here from a medium-term perspective, and that's the mid-July low. And that was made just down here around 82.11 or so. So JD Sports testing resistance, probably continuing to test that resistance as long as we hold above these lows here. and we could continue higher potentially as long as we hold above that support area. Now, I've also got a question about pension B. Let's look at that. Here we go. Similar to JD Sports, as you can see here, we have tested resistance going back to January of this year, and that was tested and held as resistance in June of this year, and then we tried again in late July, and we are sort of trading sideways. But again, what do we do? What can we see? Well, basically, if you look at the chart itself, we can see that we are, from a medium-term perspective, in a medium-term uptrend, series of higher highs, higher lows, as long as we stay above the early August low. So as long as we stay above that low on the daily financial bet, which comes in around 158 or so, we are bullish. Short term, we're trading sideways. If we were to rise above the high seen in the middle of August around 171, then it's likely that we're going to retest this key resistance area here another time. If that is the case, and if we can break through these highs and close on a daily chart closing basis above the 25th of July high, which was made around 175, then the way is open to reach the high seen in July of this year, and perhaps also the high seen in July of last year, sorry, and the October high of 2024. And that could take us all the way up towards 180, 190 or so. So that is a possibility if we can break through this major resistance area. But you can see here, we've been struggling for the whole year to break through there. But basically, technically speaking, provided we stay above that low on the 5th of August, or if you want a wider stop loss, the low seen in the middle of June, the upside pressure here, even though we're in a sideways trading range, and have been for the last 2 months or so, the upside bias remains in play, in my opinion. I've got another question to look at WRD. Let's just look at that and see what we're seeing here. Now, this one is one of those where basically not much is going on. As you can see, we're sort of trying to come back. We're sort of holding, and what we need to look at with WeRide is basically the shorter term picture. What can we see here? Well, we can see that we basically have a sideways ranging trend in play here, and you can see that we seem to be short term at least holding, because we've got a series of higher lows and higher highs, but we're trading sideways because we remain below the 15th of August high. If that were to be taken out, perhaps we could test the high seen in July and also the one in May. But before that can happen, we need to break through our downtrend line. And that one you can see drawn from the 28th of July high and the high seen on Monday. So we would need to break through this downtrend line and rise above Monday's high, which is around 993 on this daily financial bet, in which case we may then retest this high going back to the middle of August. And as I said, once we break through here, I would be more positive on this chart. If you're short, where's your stop loss? Probably at the same level above that 15th of August high on a short-term basis. And if you're short, you would probably expect that down move here to be extended from this high here to the downside. So that could take you back down again towards the 800 area or so, potentially, if that's an ABC correction. So right now, sideways trading range, not really clear which direction is going to go in. So when that happens, look at the last reaction low, last reaction high. If we rise above the last reaction high, which was Monday's high, it's likely or more probable that we will continue to head high, at least for a few days. If we fall through the low seen last Wednesday, it's likely that we're going to retest that uptrend line and perhaps fall through it. And in that case, we could fall through the early August low and head towards the 800 area. That's my take on it very, very quickly. Otherwise, let's look at the German DAX index and see what that does. I very riskily personally went long just below the low, but I got stopped out on the way down once on a trade. So let's see whether we can recover here a little bit or not. But the German DAX on the daily chart, as you can see here, is suffering a bit. It's been trading sideways as American markets made new record highs, because basically we have rotation out of German stocks back into US tech stocks, etc. But last week, when we had rotation out of US tech stocks, those investments don't seem to have come and gotten into the DAX, because as you can see here, we can just trade sideways. So the DAX doesn't seem to be benefiting from that at the moment. It is sort of struggling to head higher. Whilst the FTSE 100 made a new record high last week, the DAX didn't. That's telling you that there is some weakness here. And also short term, what we've seen is a fall through the support line here on Monday. Today we had the acceleration to the downside. Yes, we're bouncing back short term, but we're encountering resistance here. And we'll have to see whether we can recover here or not. If we can't, and if we were to fall through today's low, that could really indicate much more weakness going forward. And in that case, I would expect the low from the 12th of August at around 23,940 to be retested on this daily financial bed. You can see that was where all these lows were made. So that's pretty good support. A fall through there, though, would mean a trend line break and a fall through the last reaction low. And that could then very quickly take us back down again towards the August low and lower. So watch that space going forward on the DAX. As long as we hold above today's intraday low, it's possible that we may basically recover a bit and perhaps retest this uptrend line. But even then, we need to take out the last reaction high, the high from Friday of last week at around 24,440 on this daily financial bed for us to retest the highs or try to get higher again. But right now it's struggling a bit, as you can see here. And my trade basically on the DAX was a short-term trade intraday anyway, so don't think that I bought and keep holding it. It's a bit risky at the moment, I think. But that's just my opinion, so I'm not giving anybody trading advice or anything like that. What I would like to look at now is Rolls-Royce, because that's an amazing stock. And you can see here Rolls-Royce has been going up very nicely since April of this year. We then struggled around the resistance here and we've come off, but we've just had one move down, and we can redraw our previous uptrend line, which was broken because it just flattened out. That in itself doesn't mean much. And basically, technically speaking, that's our last reaction low. As long as we stay above there from a short-term perspective, so that's low seen on Thursday of last week, around 1,026 on the daily financial bed. As long as we stay above there, I'm still bullish Rolls-Royce. Now, if we were to fall through there from a medium-term perspective, basically I would like to stay above the 22nd of July low. As long as we stay above there, for me, this uptrend is still healthy from a medium-term perspective. If we were to fall through that low, then maybe things might change and we could come back down again and possibly fall towards the 900 area, but only on the fall through this 969 low going back to the 22nd of July. So as long as we hold short-term above the low seen on Thursday and medium-term above the low seen on the 22nd of July, for me, the trend's your friend. So yes, we're trading sideways short-term, but medium-term, we're still bullish. A break above there would take us to new highs. And as you can see here, the Rolls-Royce share price, I mean, it's gone up as much as NVIDIA, and people just don't really talk about it. It's been a very, very bullish up move in Rolls-Royce, and the share looks really, really positive still. I don't see any reason, technically speaking, at the moment for long-term investors to get out of that stock, because you can see here he had sometimes sort of a monthly little dip. You can see that here back in July of 2024 and April of 2024, but it just kept on going higher, and there's no reason for this not to be the case going forward. Yes, we may lose upside momentum because after all, we've risen very strongly over the last 3 months. But that's why you look at the daily charts. And for me, as I say, medium term, as long as we stay above the 22nd of July low, everything seems to be still all right. And short term, you look at Thursday's low from last week. Now, since I haven't got any more questions, and unless you send me some more, I might call it a day for today. Thank you very much for watching Technically Speaking, and I hope to see you again next week.